Welcome to Movement Charts. Hope you all had good long weekend. Let's start with SPY. As we have been seeing the price actions for SPY is still consolidating between this 696.85 and 677.8. Between these two ranges, it is consolidating for more than a month now. Almost from January 1st week till last week. Even though we had a gap up on Thursday last week, it got sold off, and Friday it formed a doji candle, leaving a gap, fair value gap between Wednesday and Friday's candle. We can see that SPY now has triple top pattern 1, 2 and 3, and it is consolidating between these two ranges for weeks now, and we have this rising wedge pattern forming. Though we are making higher lows, the higher highs are at the same level or near to the same level. So it's very critical for SPY to close this gap and break this major resistance to move further upside, or it will break down this rising wedge pattern to test the gaps here at 669 and 660.75. Looking at the weekly time frame, SPY is consolidating on this range for about 7 weeks now. It's still taking support from this 20 EMA on a weekly time frame. Also, we can see RSI bearish divergences for so long now. The good thing is that SPY is still holding this 20 EMA on weekly time frame. Looking at monthly time frame, we have one more week to go for the monthly closure. In monthly time frame also, it still shows consolidation, taking support at 9 EMA. RSI is still above 70. Any dip on the lower time frame, like the daily, it will be bought up, as it has some more rooms to break on the monthly time frame. For now, we have strong resistance at this level, 696.85, and currently at the support price we have this gap between last week's Wednesday candle and Friday candle. Looking at the hourly time frame, prices keep getting rejected this gap, and it even formed a bearish reversal setup here that caused a drop of more than $3 in an hour, and it formed on fair value gap also. So any rejection at this fair value gap will cause the price to push further down. The candle closing conveniently above this resistance level may lead to test that supply zone above. Moving on to Microsoft. Microsoft still on downtrend, currently mitigated this gap. Last week it had a relief rally, but then it rejected at 9 EMA and it formed a fair value gap between Tuesday and Thursday's candle. Friday's candle was just consolidation. So if we see any rejection on this fair value gap, may lead to test these levels here. Instead, if this gap get mitigated and if you close above this resistance level, 424 resistance level, which may lead to test this resistance at 444, even to test this large gap formed during the earnings. Looking at the weekly time frame, weekly time frame also, we just mitigated this gap, and last week's candle was a gravestone doji, which is also an inside bar. It may be a consolidation for another down move to test this support levels and 200 SMA on weekly time frame, or if you see a bullish engulfing candle closing above this gap between this green candle and last week's red candle, there is a small gap, then Microsoft may break this downtrend, because this is not only at the gap, it is also at the trend line support of this long-term uptrend, which I have on my chart. Looking at the monthly time frame, though we have weak mode to complete this candle, and the monthly time frame also, we just mitigated this gap, and price is just at this gap level and this trend line support level. Moving on to Apple. Apple we discussed last week when it had this shooting star at RSI 70, and we were looking for a gap fill, this gap fill between this doji and this green candle, which led this up move. Instead it broke through that fair value gap and it formed an inverse fair value gap. So we really need to fill this gap and close above for the upside continuation. Any rejection at this resistance or this gap will lead to another lower low. It looks bearish unless we take support at this demand candle, this great demand candle which formed on January 30th. Moving on to Meta. As we anticipated, it printed a bullish candle at this fair value gap, but then it rejected at this small bearish fair value gap over it, which led to break this low, and currently it is mitigating this larger gap. It also formed a small bearish fair value gap here. So for Meta to move upside, it needs to close above this fair value gap and this resistance. Any rejection at this area will need to test the support levels again. So any closer above this resistance area and this 200 SMA will be good for Meta to move upside further. Moving on to Oracle. As we discussed on last week analysis video, after we see this inside bar, the bullish Harami candle on Friday, at one point it was up 12% at one point, but ended with 9.64% upside move, and still it is consolidating above this candle and mitigating this fair value gaps. And looking at the weekly time frame, Oracle now has inside bar on weekly time frame, testing the 200 SMA on weekly time frame, and the RSI took support at 30%. So if it behaves the same way as it did in daily time frame last week, then Oracle may break this resistance to retest this resistance level or breaker block between 217 and 230. The inside bar on the weekly time frame at this level is very important because it took support at 200 SMA on weekly. Also the RSI took support at 30 and closed above this trend line, which it respected last two times. Looking at the monthly time frame, Oracle looks even better, though we have one more week to finish this candle. Currently it just mitigated this fair value gap on a monthly time frame and reacted from this order block as well. So if you close above 177.78 on monthly time frame, then we may go under mitigate this gap. Or even the supply zone. This is a monthly time frame, so it will take it one time to test this level. But on the lower time frame, like daily or weekly, we have different resistance levels. Like we have this overhead resistance at 177.78, which needs to be taken out first, and then we have the supply zone around 200, 205 level. So let's see. I have this trend line drawn to see how it reacts to this trend line and this resistance level in the coming days. Any candle closer below this gaps or below this bullish Harami candle may lead to test these levels at 121.74 or even 117.85 below this candle. Moving on to Hood, Robinhood. Robinhood is currently on a downturn in a daily time frame because we have 20 EMA crossed over 200 SMA to the downside, but you can notice that we have this RSI bullish divergence on the daily time frame while the strength moved to the upside while the price was moving down at this support level, and it printed a bullish Harami candle on Friday session. So if we see a similar thing happened on Oracle last week, and we may see some upside move to close above this gap and test this gaps and the resistance in the coming days. Looking at the weekly time frame, so on a weekly time frame it fulfilled all these gaps and currently at this demand zone. Also, if we check if extension from this swing low to swing high, the price is around 61.8. Retracement between this swing low to swing high. So there are possibilities our relief rally to mitigate this gaps and this underlying breakout at 102.90. Looking at the monthly time frame. On a monthly time frame, currently it is testing this fair value gap under this previous breakout. And we have this 20 EMA to support. So let's see how next week closes for Hood. Yes, it is at critical level, previous resistance breakout.